At the end of the day, money is all about freedom. It's not about acquiring things. It's about being able to do whatever you want, whenever you want, and say whatever you want. The key is to have as many people as possible interacting, making money, creating wealth, and be very opinionated and expressing themselves. Welcome, folks. Good to see you again. This is our 5th event of the year. We have had like 45 events so far, over maybe 3,000 attendees. We have around 300,000 followers on social media. What do we stand for, really? We stand for finding solutions for very thorny problems and issues. The thing is that a lot of people today bitch and moan about a lot of things. But there are very few people out there who are really trying to find solutions. We're not a political organization. We're not talking politics here. We're bipartisan. We're capitalist. We're entrepreneurs. We want to make things happen. And this is really the thrust of what we do every day. We want to empower entrepreneurs. Entrepreneurs is the backbone of this country, is the backbone of everything, because they have skin in the game. I believe in people who have skin in the game. That's why we rarely invite bankers, economists, lawyers to talk, because they pontificate. They don't have skin in the game. We like to work with people with skin in the game, who make things happen. Talking about entrepreneur, we're going to start, we have every event we do, we award an entrepreneur. We have a person here who's been, worked for corporate America, for JP Morgan for years, then decided to go on his own. Avender Smart. I'd like to introduce you to Avender Smart. He'll tell you a bit about how he got there, what he's doing. I don't want to steal his thunder. Avender, please join us right here.
Wasn't expecting that. And honestly, I can't remember the last time I was given an award before. So thank you very much for having me here. So I am a fledgling entrepreneur, but I don't even really consider myself an entrepreneur. I consider myself basically a guardian of Bitcoin, of the future of money. I have devoted over 5 years of my life to Bitcoin, and whatever I become in the future, I will not take credit for. It's really because of this new technology. It's best to really compare it to the internet itself that it is based after, it is modeled after. So I consider it like the internet 2.0. Imagine a currency that you can walk into any French bistro and pay for your latte with, and at the same time walk into your favorite Lamborghini dealership and buy a supercar with. Imagine a currency that you can send in a matter of seconds and receive your confirmation in a matter of minutes, any amount of money that you choose. That is the future of money. That's what Bitcoin means to me and over 25 million people around the world. Every year, basically, the scope, the usage, the adoption of this new technology doubles. And I consider it the greatest invention of the 21st century, the greatest invention since the internet itself. And it basically, again, models the internet. So we've seen this movie before. We know who wins. The newspapers don't win. The internet wins. The US dollar, the yen, the yuan, the euro, they don't win. Bitcoin and the world of digital currencies win. You will be using a digital currency in less than the next 10 years, here in the United States as well. The only question is, which digital currency will you use? Will you use a national, centralized digital currency? Or will you use a global, decentralized future of money. I hope that you make the right decision, and that is why I created Bitcoin University for you and the rest of the world to use. So why should I be the one to teach you anything about Bitcoin? I guess I'll need to go over my personal history. When I was a young man, my mother and father taught me to go to school, get an education, get a good job, start a career. And my sister, better student than I was, she went to Harvard Law, is a very well-compensated attorney here in the New York area. I was not as good a student as her, but I was able to get a job on Wall Street working as a banker in 2008 in the middle of the Great Recession, and actually in the middle of the formation of this transformational technology that is known as Bitcoin. And I learned a lot about myself at the bank. I learned a lot about salesmanship. I learned a lot about what makes the world go round. You know what they say, money makes the world go round, right? And over my time there, again, I'm very thankful for the time that I spent there because I learned that that is not the place for me. Money doesn't make my world go round, I guess. I learned a lot about myself, and I learned that I need to leave the banking area. I need to find. And I was fortunate enough to discover Bitcoin in 2013 during the fall of the nation known as Cyprus. We learned about bail-ins in Cyprus, and we learned about people investing in Bitcoin from Cyprus. And that's really kind of the last time I guess I listened to mainstream media. That's the last time they were right about anything. But over those last 5 years, it has literally changed my life. It has changed the life of people that I know and love. And I have been supporting myself as a journalist, writing articles about Bitcoin. I've written almost 1,000 articles, paid in Bitcoin for CryptoCoins News, Cointelegraph, Bitcoin.com, and so on. And there is really nothing more important that I think that I could be doing right now than teaching the world about this incredible technology. So I want to go over some of the reasons why you should start in investing and learning more about this incredible technology. So imagine a currency that you can invest in that doesn't depreciate every year, like the US dollar and any fiat currency you can name, but actually appreciates every year. Last year, Bitcoin grew in value over 1,400% in 2017. Over 3,000 people who invested in Bitcoin became millionaires just through these investments. And this is just the beginning of what a Bitcoin can do. If you notice the US dollar value of a Bitcoin, you understand about 5% of what a Bitcoin can do. If you had $7,200 invested in Bitcoin at the start of 2017, by Christmas you would have had over $100,000. Bitcoin as a currency is even more transformational than what it can do as an investment. This June, someone traded $291 million worth of Bitcoin on the Bitcoin blockchain. They moved this currency in 10 minutes, and they paid 4 cents to do this transaction. So that is, again, not even using Bitcoin's Lightning Network, which will come next year. But again, what Bitcoin can do as a currency is also amazing. Unfortunately, you're not hearing about this on the mainstream media, but hopefully we don't have a PR department. I'm the closest thing to a PR department that Bitcoin has, so hopefully I'll do a better job here in the years to come. What Bitcoin does very effectively is it removes intermediaries and middlemen and basically makes every transaction a peer-to-peer transaction. So it's a lot like sending an email. It's a lot like using the internet itself. So if you like the internet, you're going to love Bitcoin. But Bitcoin is much better experienced than explained. So a lot of people like to focus on what is a Bitcoin and the technology behind it and so on and so forth. But I feel that that's really the wrong way to look at it. We use plenty of technologies today that we really don't understand how they work. I don't know how my smartphone takes a camera picture of myself or anyone else. I don't know how it gets on the internet. I don't know how the transmission of my car works. I don't know how my car gets me from point A to point B. But I have a car, I have a smartphone, I have a camera, I have an iPod, I have a lot of things I don't know how they work. But they have enriched my life, they've made my life better, they made me feel better about myself, I guess, or what have you. So that should not be a deterrent to you using the future of money. A lot of people don't know how US dollars are made, but you use those every day as well. But that's another story for another day. Back to Bitcoin as an investment, I'm sure over the last 5 years you've heard investment gurus and people on cable TV tell you, buy gold, buy silver, buy precious metals, right? Well, over the last 5 years, gold has been down about 5%. If you bought an ounce of gold 5 years ago, you would have lost about 5% on your money, not factoring in inflation. Bitcoin over the last 5 years has grown over 8,200%. So maybe it's time to question your financial advisor or whoever you're making your investments with. Bitcoin can do a lot for you in many different ways. Another benefit of using Bitcoin is it is a fraud-free economic system and it is a debt-free economic system. For some reason, the term deflationary is some type of a bad word here in the United States, but the amount of people who use Bitcoin every year doubles, and the amount of Bitcoins actually drops every 4 years. So this ensures a long-term economic value and demand for this transformational technology. So today you can actually get married on the blockchain. If you want an immutable system where no one can doctor your paperwork, you can buy land, put your titles on a blockchain. You should use Bitcoin for these things. It is the most dependable, the longest lasting, the most protected, most durable blockchain in the history of the world. And it will always be that. Every other blockchain that comes forth, when Facebook makes a blockchain, your local bank, your local government, they will all be derivatives and lesser derivatives of Bitcoin's blockchain. So when you hear the term blockchain over the next decade, which you will hear that plenty, these major corporations, brands, governments still act like they created some type of incredible new technology. And it was all created by Bitcoin. It was all here and brought here and delivered here to you. So you cannot separate Bitcoin from blockchain any more than you can separate an ear of corn from a hull of corn. It's all the same technology. It's all one package. You can remove that package and apply it to different systems because Bitcoin's open source. So Bitcoin's not hiding its ledgers, it's not hiding its fees, it's not hiding its technology. If you want to apply it to a sports team or YouTube or anything like that, you can do that. That's all fine and good. My goal is to make sure that Bitcoin, thousands of people losing their lives in Venezuela because they cannot eat, because their currency is worthless. And this has happened in many countries. It's happened in Zimbabwe. Greece has had a major devaluation in their currency. And Bitcoin's always seen a bump in its value, actually, based on these things. People in Venezuela are mining Bitcoin, and it is saving thousands of lives. So what is Bitcoin doing for the world? It's not just here to be an investment. It's not here to be a better form of PayPal. It's actually saving lives in many of the countries of the world. So Bitcoin may not be as valuable here in the United States. It may just be a great investment. Maybe you just would like to make 1,400% on your money in a year. That's a good deal. But there's so much more to it. If you just see its dollar value, you're really missing the point on what a Bitcoin can provide. So I wish all the best to the people in Venezuela, and I hope that they keep mining Bitcoin, and I hope that they can help change the global perception of what this technology can do. So Bitcoin is pretty much in the same place where the internet was back in 1998, 20 years ago. So this is this generation's form of the internet. We're doing the same thing that we did with the internet, we're doing that with money. So it's really a son of the internet itself. And you can be your own bank. Maybe that's attractive to many people here. You can manage your own money, you can be in charge of your own security, and at this point in time, obviously, you would be an early adopter. You're still able to get in before the 10-year anniversary of Bitcoin, and you can buy in the end of a bear market. So a lot of people ask me, hey, what's going on with Bitcoin's price, and so on and so forth. You're in the right place at the right time. Maybe I'm in the right place at the right time. I can maybe touch somebody's life and say, hey, you know what? We're at the end of a bear market. I'm talking about this month. So in the years to come, you will not be using paper currency. You will be using a digital currency. So you might as well use it on your smartphone. You might as well use the best digital currency ever created, because you will have options in the future to use national versions, corporate versions, branded versions, and so on. And they will all be derivatives, they will all be weaker versions, less useful versions, less capable versions of Bitcoin. Nations right now, as we speak, are working on their own versions of Bitcoin. So the IBM has already spoken to the Federal Reserve about creating a national version of the US dollar. This is going on 3 years ago. Reuters reported this. Australia, Japan with J-Coin says they'll have a national digital currency up by the Summer Olympics in 2020. China, UK, you name it, pretty much any of the G20 countries, within 5 years, they should have something functional and ready to use. So we are moving into a digital currency age. Right now we're in a digital age, but now we're heading into a digital currency age, thank you to Bitcoin. If you need any more information about me, also look me up online, Evander Smart, just type me into your search engine. Connect with me on LinkedIn, everybody else does. So I'd love to send you a message, chat with you, and if you have any questions about Bitcoin, I'd love to speak to you. So thank you for your time, thank you for having me here.
What takes you, what turns you on, what are you afraid of, you know? Spill your guts, for God's sake. Come on. Come here. Yeah.
This is not scripted, I just had some bullet points, and I could just see a few words. I mean, if you got 3 hours, you know. You guys want to do a Q&A? I'd love to answer any questions, but again, what inspired me to get into Bitcoin, I mean, I just kind of walked into work one day, June 2011, and I was like, you know what, I can't do this anymore. JP Morgan had acquired WAMU. You know what's going on with the migration in the EU? They pretty much did the same thing with my bank. They just flooded it with all these so-called bankers. And I was at a branch where, you know, we had 6 or 7 bankers. Now we have 13 or 14 bankers. I'm sharing my desk with someone who's really not qualified to be there. So that was kind of part of it. I think banking can be a lot better than what it is. And fortunately, I had the guts or the lunacy to just walk out of the bank and not have a job to go to, and kind of walk into Bitcoin, because I was just watching TV one day and they were just talking in the Financial News Network about Cyprus. I didn't know what the hell is Cyprus. What the hell is a Cyprus? And they went over bail-ins, and I didn't know what a bail-in was, and they went over, everybody's putting their money into this Bitcoin to protect their wealth, and I was like, what the hell is a Bitcoin? And now we're here 5 years later, and a lot of people still don't know what a Bitcoin is, so I figured I'd solve that problem. So, you know, I'm here to solve a problem, and Bitcoin's solving a lot of problems, and just the people who have the guts, the intelligence, the savvy to get in the first 10 years are going to benefit. And I've known people who've become millionaires in the last couple of years just because they got started. So the hardest Bitcoin is your first one. So if I can help you with my website, I would be honored to tell you everything I know.
Well, as you can see, it's all about education. The more you educate yourself, and nobody's going to educate you, by the way. Nobody ever educated me on anything. I had to take everything by force. I have to learn everything by myself. Nobody will educate you. They don't want to educate you. They don't want you to think smart. They want you to stay stupid. And if they educate you, you become better than them. Nobody wants you to become better than them. Remember this. Nobody wants you to become better than them. That's human nature. So you have to basically educate yourself. It's all about education. We never had any panel on education, and that's the topic today. Thank you, Stan. Thank you, everybody here. So let me tell you who we have here. I'm not going to tell you who they are and recite their bios. You know, nobody can do it better than them. So we have Stan Silverman. First, I'd like to thank all the board of directors who supported this, and the sponsor, Minerva Capital Management, who sponsored this. A big applause for them, please. I know, Stan, you're very impatient to talk about this, but now is the time. We have Stan Silverman, CEO and founder of Minerva Capital Management. We have John Coover, who's the president and co-founder of Minerva Capital Management. Yeah. we have Joe D'Angelo, who's a partner with Karl Marx Advisors. And Michael Lauer, who's president of Hedge Fund Concepts and an advisor to Stan Silverman. So, to start here, could you please, gentlemen, share in a couple of words, each one of you, what do you do best? Who are you? And why are you here? That's it.
I'm Stan Silverman. I'm here to tell you about investing in the education sector. I've spent 30 plus years in the education market, originally working with colleges, universities, and schools to help them market, to be a little crude, to teach them how to put asses in seats. In the end, you have to attract students to a college or a university. Each student has a certain dollar value attached to them. You have to keep those students in school, and most importantly, and I think the reason I went into the business, you have to really be centered on changing people's lives and dealing with outcomes. If you can change people's lives and deal in outcomes, then the money flows. Or do the right thing, and as a result of doing the right thing, the money comes to you. Now, I got into the hybrid hedge fund business, or the hedge fund business, because having worked with other colleges and universities and helped them and owners to succeed and to make lots of money, one day a friend of mine came to me and said, well, why are you doing it for them? Why don't you do it for yourself? And I said, do it for myself? What are you talking about? He says, start a hedge fund. And that gentleman is sitting on the panel, my friend Michael. And Michael said, yeah, I'll show you how to do it, and I'll work it out. And Michael was very, very successful in the hedge fund business. And so, well, with Michael's help, I put together a team of people who had the background and experience in the business to make a difference, who shared my ideals about helping people and making lots of money. A number of them are here today. And we started a hedge fund, and as of today, I can say that we've really done, I would say, nicely, but we now have our first deal on the table, having signed our first purchase of a $42 million school system, which will now go into due diligence and complete hopefully before January. So we're off and starting, and I'm very happy and excited to be in this business. I find it fascinating, and self-taught with the help of my friend Michael and the help of my friend Deepak sitting in the audience. They teach me what I need to know about the business, and it's in a very, very exciting business.
Fantastic. Thank you, Stan. John?
Thank you. I'm John Coover. We've met several of you already. I came into the business for reasons that I didn't even know. I originally started my life writing some software for high-end medical equipment, and was very successful at it. And someone said, gee, you love kids, why don't you check it out? So I did. And I've grown through the business. I was a co-founder of a major school group. I'm proud to say that we were able to realize, when I early retired, about 4 billion market cap, and it climbed from there. We were one of the companies that kicked United Airlines off of the NASDAQ listings. They came back, obviously. Now, when Stan mentions passion, and Ziad mentions passion, you can't stay with this, or many things I'm sure, without that passion. And my objective is operations. It's to make sure we make the money, but more importantly, that we keep the promises. And we keep the promises with our students. They're our customer. And our students are two parties. One, all of our human capital, all the people who keep the promises, and our other customer and student are the students. And I find great satisfaction in that, and will always find that kind of satisfaction.
Thank you, John.
very much.
Michael?
Well, very shortly I'll be celebrating my 40th year on Wall Street. So hopefully what I bring to this panel is my perspective as an investor, first and foremost. I don't know much about the educational business, but since 1979, I catered to hedge fund community and the investment community as an analyst. And I was very lucky to interface with some of the most iconic hedge funds in the business, arguably in the most interesting era for hedge funds, being the 1980s and then the early 90s, at least as far as performance is concerned, and the very eclectic set of strategies that you could follow to achieve what I think is really interesting about Minerva, and hopefully I'll get a chance to comment on that. By 93, I was lucky enough to have enough money of my own to start my own hedge fund. I thought, if these guys listen to my opinions, perhaps I should just follow my own guidance at some point and do it for myself. And frankly, it was enormously gratifying, particularly since the objectives and the strategy and the like was all up to myself. And what I find in Minerva, again, hopefully I'll get a chance to talk about this, is a bit of a deja vu of what I saw in the 80s and 90s, both from a objective perspective and the strategy perspective. And I hope to offer that to you, having started 4 hedge funds, having grown them to well over $1 billion at a time when it was a lot of money. And much of what Minerva does dovetails very nicely to what we did, and I think has a long-term viability pretty much irrespective to what the market does.
You know what you said right now reminds me of something. I think we're pretty much back like in the 80s. Think about it. We have a bull market. Leverage is back, but it's much more intense, much deeper. We have a president that's pretty much like Reagan, back there in the 80s, with plus or minus, but that's the spirit, freedom, wealth, capitalism, although he's being fought a lot on this front. So I'm not surprised, you're back here with Stan, helping him, advising him on that, having been that through the 80s. But I think these are great times we live in, and much more opportunities out there even than in the 80s. Of course, technology, everything is a big enabler that we didn't have in the 80s. So.
But these opportunities never left.
Yep.
The fact is that the
It's always a
market is
window.
often distracted
Always a window.
by the macro picture.
Yep.
And it's not necessary. We can talk about this $3.2 trillion industry that the hedge funds have become.
Yep.
And yet it has no relevance to someone who's a bottoms-up stock picker.
True.
Increasingly global, increasingly opportunistic.
Yep.
So I find that over the past 40 years, it never ended if you were true to your discipline, true to your objectives. And that's what I see in Minerva. Now, to the extent that you should be able to make money, irrespective of what the macro picture looks like.
Absolutely.
Absolutely. Joe?
Yep.
Thank you, Ziad. My name is Joe D'Angelo. I'm a partner with Karl Marx Advisors. We are a corporate restructuring and investment bank. I'm here because I met Stan and John when I was marketing a for-profit education system for sale, and they kicked the tires to look at it. And I'm here to support them in their efforts at Minerva Capital, and hopefully have the opportunity to show them some other school systems now that they have so much money to spend. My story is pretty simple. I'm a leader. I'm driven by making a lot of money to improve the quality of life for my family. But as an athlete, I'm a sore loser. And I got into the restructuring business in 2001. I got to look at the internet when I was in business school and went to work in telecom. And when telecom deregulated, we started a national CLEC and took it public. And I filed it for bankruptcy in 2001. And I said, we all had the same business plan. They're all going to file. And I joined Alvarez and Marsal in 2001 and did like 16 telecom deals and then became a generalist. Since 2010, I got involved in my first post-secondary education case, and I have an affinity for education. And I'd love to be the president of Columbia University one day. But I don't know what could be more fulfilling than educating students and creating the kind of drive and vision and bucking the normal trend like a Vander's story. The other thing that drives me is leading people to levels that they're not going to get to by themselves, and then looking back and feeling good about how we got there. And that's what I try and do day in and day out. And 8 years later, we've been very busy in education, and I'd like to leave every client better than I found them.
That's great. Thank you, Joe. Thanks a lot. All right. I mean, investing in education is definitely good. It's noble, it's good, empowers, educates lots of people, etc. But what is it about the education sector that makes it such an attractive opportunity for investors? I mean, you're competing with so many other asset classes, so many other sectors. You're doing good in terms of doing good. You're much better off than all of them. Much more noble cause. But what is it so exceptional? I mean, I've never heard, or maybe I'm ignorant in this respect, of people who made tons of money investing in the education sector. So if you could please, each one of you or any one of you, address that, I would appreciate it.
Well, when I start, first of all, to position the education sector, you're talking about the second largest sector in terms of value in the United States. It's a $1.4 trillion sector, which is 7% of GDP. Only health is a larger sector. The sector is...
I'm sorry, the largest sector is healthcare? Which one is the largest sector? Healthcare?
Education.
No, the second largest. What is the largest?
Education is the second largest. Healthcare is the first largest.
Healthcare, yeah. Okay,
Yes.
gotcha.
Okay. The sector offers a lot of opportunity because the sector is made up, of a lot of different sectors. We specialize in the for-profit and the not-for-profit education sector. These are medium-sized companies with EBITDAs of anywhere between $2 and $10 million, usually owned by private individuals who started a business and are now getting into their late 60s and early 70s. These individuals have grown their business and they have done very nicely, but they really didn't have the expertise to expand the businesses beyond their $10 million in EBITDA. They didn't have the marketing, they didn't have the market knowledge, and they became pretty complacent with where they were. As we go in and look at these businesses, we see them having tremendous growth opportunity, whereby we can pick up a business today at a multiple of anywhere between 2 and 5 times EBITDA, depending upon the intrinsic value we see in the business. And over a period of 3 to 5 years, with our private equity side of our hybrid hedge fund, we see these businesses quadrupling and quintupling in EBITDA and doubling or tripling in the EBITDA multiple that we'll be able to sell them for. So we see a very short-term investment of anywhere from 3 to 5 or 6 years on the private equity side of our business, and on the hedge fund side of the business, we look at a number of the the publicly traded companies where we're going in, and we're going in as activists. But activists in a little different way, not as a negative activist going in and fighting with management, but going in and purchasing companies at huge discounts or large blocks of stock at huge discounts, going in, helping these companies to turn their businesses around through their marketing, through better financial aid management. We have with us, by the way, today, Peter Terabisi, who's one of the best in the business, working with us in this area. So we go in and as an activist, we help people turn around their businesses, and then we hold it for a period of a year or less, and then sell off after we've helped turn those businesses around. So there's a huge amount of money to be made in the business, and also there's the satisfaction of knowing that you help people to change their lives, and that you've been instrumental in helping families to grow and to live in a society which is very difficult to live in if you don't have a job, you don't have an education, you don't have money.
John?
Well, I'll give you the short version of that.
Thanks, John.
And I would ask you not to be mistaken that I'm just altruistic about all this. Rather, you come into this business for the right reasons, and the right reasons are the results. If you come in with the right reasons, then you don't chase the dollar around the track, because you'll never catch it. But if you come in with the right reasons, as we do, and as we do our due diligence, if we find a system that is broken, it can be broken in one of two ways. Broken because the people who are running it, frankly, didn't do it for the right reasons, or the people who are doing it for the right reasons, as Stan just mentioned, can not have the skill set or the vision to take it to the next level. And that's what we bring with our management teams. And in short, the management teams, it's an easy thing to say, but you have to find them, right? Fortunately, with a combination of 65 to 70 years between us, we have wonderful colleagues and friends that we have brought up through the ranks over these years, who on a phone call, we can establish a dynamic team that will bring the synergy and the results to an investment and a very, very handsome return. Thank you.
Thank you. Michael?
You see, as I mentioned, I'm not educational industry expert, but what I see here at this point is something that any savvy investor should look for. So what I see is a highly fragmented, rapidly consolidating business with at least 2, potentially 3 levels of valuations, meaning the premier companies are selling at fairly lofty multiples. The second tier are lesser, and third tier, where Minerva will be focused on, are at very substantial discounts. That creates terrific opportunities. I've seen it in other businesses as well. And for that, you can see how you can exit at substantially higher valuations if you can have a vehicle within which you can consolidate 5, 10, 15 of these smaller companies, bring your value-added expertise as an activist, and then exit assets that you entered at 3, 4, 5 times the EBITDA at 15 times the EBITDA. So again, my perspective is more technical. It's applicable to other industries as well. And we've had exposure to the industry, but the first time we did was actually on the short side, where you could see the proliferation of these companies, almost unending, and ultimately it ends up in a tragedy, in a catastrophe, as it did. Now, obviously, we're well beyond that point. We're in the midst of a recovery. We've already seen the premier companies take off, as it usually happens in each sequence. You see the high-quality assets move first, then the secondary assets, and then the tertiary assets. And this is where Minerva is. Hence, as an investor, I think this is a very timely situation.
What's the average EBITDA multiple you see today on private equity transactions in the education sector?
Is that a question for me? Or?
Oh, any one of you.
2 to 5.
2 to 5? 2?
2 to 5.
Oh my
Correct.
goodness.
That's if you have a clean regulatory compliance record.
Yes, and
2 times EBITDA. It's nothing.
It's nothing, and the part of the reason is if you look at the publicly traded market, the 13 publicly traded companies over the past 20 months have shown a little more than a 52% increase.
We should get this deal done, Stan. That's it. We should get this deal done. Your first deal. Done. Okay. So tell me.
Ziad,
Yes.
there's some fundamental reasons why there's an opportunity to make a lot of money here, and it's
I didn't know about 2 times EBITDA. This is amazing.
yeah. Well,
Love it.
that's for a school that takes Title IV financing from the government. If you have a school that does pilot training and the corporation pays, you could sell those for 10 or 12 times EBITDA.
Yeah, of course. I'm not talking about the sale. I'm not worried about the exit.
1 to 2 times.
Yeah.
So the reason there's an opportunity to make money in post-secondary education is because some things changed, like any other sector. And the things that changed are the labor force requirements is different. And there are adult learners that realize in order to make a career change or get a growth in wages, you need to get a little bit more education.
I think it's more than that. It's not. I think it's also because partly a lot of the sellers in the private education space are not savvy enough like the technology guys.
No, I didn't finish.
And they're not chased. Sorry to interrupt.
Yeah,
This
today's students did not grow up on a paper medium. They grew up on the medium of the internet. And so education delivery is changing. And if you're not embracing that and you're not innovating, then you're falling behind. And people don't think about innovation in the education sector. They don't think about how does their product prove itself. And the consumer is becoming more informed, like in healthcare, and they're scrutinizing the cost benefit of an education. They want shorter, cheaper programs where they can get back into the labor force and have the opportunity to make more money. That's a dramatic shift. One of the biggest opportunities to make money is getting in before the next cycle change. When unemployment goes up,
Yep.
this business is counter-cyclical and enrollments will go up. It didn't happen in the last economic recession because the correction was so protracted and we've seen stagnant growth in wages. But investing before that next dip is a very big opportunity to make a lot of money.
Let me ask you, who are the 3 top players in the private equity space in the education sector?
Go ahead.
You know?
Leeds Equity, for example, was one of the leaders. They had made very big investments, and now they're one of the leaders in ed tech. Palm Ventures is one of the early investors in the space that has made tons of money and now is buying at the low again, seeing these opportunities to innovate and consolidate. Otherwise, it's really a fragmented, there's probably 50 PEs that own all of the for-profit ed companies. And part of the problem is this used to be a mom and pop cottage industry. There were local schools, many of them you would think of as beautician cosmetology schools. When private equity sponsors bought these schools, they realized that the revenue is coming from the government in the form of Title IV loans. So instead of teaching a 9-month cosmetology program, they expanded into associate's degrees and bachelor's degrees and graduate degrees because they wanted to get 4 years of revenue for the same cost of acquisition. But they didn't differentiate themselves and they weren't much cheaper than the traditional opportunities for education, and it's caused an overbuilt sector.
So, having said that, what are the nuances for investing in this sector that separates the man from the boys to achieve this kind of return? What is so unique about Minerva? What are you offering so unique that the others are not? It's very fragmented. 50 PE firms are sharing the profits, are doing all that kind of stuff. So what does it take really for somebody to emerge? Is it just a question of massive capital?
No.
You know, no. I'm sure not, but I'm just thinking, I'm sure it's not. So what is it exactly? I mean, teams are always teams. Of course, each one of you has significant experience, but also the same applies, I would say, for the others.
No.
So,
That's
no?
not correct.
Okay.
When you look at the private equity companies,
Yeah.
the private equity companies usually have no ground level experience in the education business. They're at a 70,000.
So they are generalists wanting to go coming
They're at a
into...
generalist, and they may have 1 specialist or 2 specialists depending
see.
upon the size of the company. We only have specialists. And because we have specialists, not only do we get market information on who's for sale that Joe would not hear about because they're usually smaller groups, but the people who we work with usually deliver anywhere from 20 to 50% more efficiency in the marketing of a buy. So we're more efficient in putting students in seats. I have with me my executive vice president who heads the advertising agency, Sam Jarvis here. Sam was one of my clients, and you'll excuse the English, everybody. He was a hard ass to deal with as a client. And so what did
My
I
kind of
do?
guys,
I brought my hard ass aboard, and now he's a principal in the company.
So what would a typical investment be like, in the sector, the education sector? Size, source, and how do we get involved if we are like, I run a family office, if I want to be involved in the family office, these guys, as an LP, as a co-investor, as a co-GP, as what exactly? How do we get involved? I know it depends on the size of the ticket also. That's why I want to ask what size, what kind, especially with these multiples you're offering or that you could nail, that could be pretty attractive.
Well, look, you have to assume the perspective of your key constituent at
Yep,
this
of
point.
course,
And with
always.
all due respect, it's not the student, it's not the regulator, it's the investor.
Of course, always.
Begin with the objective again. The objective is to make as much money as you possibly
Yep.
can and expose yourself to as little risk as you possibly can. What it means is, in the context of Minerva, is that you use this expertise not only to find these companies, preferably in the second and the tertiary market universe, but also to come in and be proactive. And
Of course.
frankly, the better ideas probably will not require much tweaking. It may be just a question of getting rid of this, getting rid of that, or making a matchmaking transaction here and there. And again, there are other industries that have gone through it, that are going through it, and that type of dynamic is very attractive. So the investor has to appreciate that this management has done it for a very long time, but on a one deal of basis type of thing. They would identify the company, raise the money individually, and then go out and hopefully complete the deal and do whatever needs to be done. Thought that it would be much more efficient if he just raises the pool of assets once, pitches the idea as to what the objective, strategy, et cetera, are, and then it will give the fund much more flexibility as well from a negotiating perspective and the like.
Yeah.
So the client has to buy into the strategy, first and foremost. And the fact that it happens to be in education, believe it or not, to most clients is very secondary. I tended to favor defense, multi-industry conglomerates type of things where you have real tangible assets, technology. Here is an educational vertical that is an enormous market, as Stan pointed out, that is in the midst of a transition, as Joe also pointed out, that could have very long legs in terms of secular recovery that looks like at least half a decade, potentially 10 years. So the type of multiples of appreciation on their cost basis, even cash on cash without any leverage, could be very substantial.
Okay, so let me ask you, are you actually running the typical fund with a GP, LP, 80-20, or are you doing it on a deal-by-deal basis, depending on the situation? Stan?
Right now, we're doing it on a deal-by-deal basis.
Which is much smarter, frankly.
Yeah, depending upon the situation, and there are lots of opportunities. As I was talking to Joe a little earlier today, I found a system that I'm currently working with doing their marketing that might be up for sale again, and the selling price of this should be about $1 and then $2 to $4 million in investment for the marketing. And this would be a system which has, right now, I think 18 schools. The opportunities here for a sharp investor who knows the market are just phenomenal.
Well, I mean, my opinion, if you can go on a roll-up program, buy between 2 and 4 times EBITDA, leverage it till 90% LTV, like we talked about, You're killing it.
Well,
Nobody's going to do this kind of money. No
what-
fund, nobody's going to do this kind
what's
of money.
special about what
killing
Minerva's
it.
doing is they're gonna find the broken systems and they know how to fix them. And so between 2007 and 2009, the PE firms bought most of these cottage mom and pop businesses. And at that time, these businesses were throwing off EBITDA margins upwards of 20%.
Love it.
And they were printing money.
This is like a tech play, even more.
And the PE firms were doing dividend recaps. And when they did the dividend recaps around 2009, 2010, is when the decline in enrollment started to happen. And because they are a ground-based system, you have the fixed cost of the building. And so you get 20% EBITDA margins when you fill the building with a day class, an afternoon class, and an evening class. When your enrollments drop, where you can hardly fill the day class, you can't earn above your fixed cost, and the EBITDA margins disproportionately fall, and all their leverage covenants get busted, and the banks force a sale. And the opportunities for Minerva are finding those systems. I think the right size is the example they use is the right size. You can affect change quickly. The idea of rolling up and going national, I think you run the risk because there are geographic differences in what you need to provide to your market. And if you get away from that, you'll sub-optimize the opportunity.
So what has been your average ROI, Stan, over the last 5 years doing education kind of deals?
The group, the principals in the group over the past 5 to 8 years have averaged 200% return annually.
Ah, this is awesome. Sign me up.
Yep.
Love it. Love it, love
I
it.
just happen to have a paper right here for you to sign.
Yeah, I
Jack.
will sign. Give me. I have a pen. I'll get you a pen. Don't worry about it. So that's fantastic. Okay, what about the damn regulators? Are they busting your chops?
Yes, they are wonderfully busting our chops.
that's right.
I have to say that
that's right.
the best thing, I love regulations. Why? Because I think the students need to be protected. If a group can't run a school and
It's a very good- yes.
deal with every one of those regulations similar to what you have in the financial community. I mean, what community is more regulated than the financial markets?
That's true.
The same thing is true in education.
I know.
If you can't make money doing the right thing, get the hell out of the business.
Love it. That's a great approach. All right, guys, I'm done with questions. Yes, sir.
On regulation, I've participated in other industries where regulations are very strict, including the defense business. And the fact is that it has its positives, not only in terms of protecting the students, but also it creating what Warren Buffett called the moat around the industry. It creates barriers of entry. And for non-participants, it makes it so much more difficult to penetrate when you have to deal with regulations that may be already second nature for the companies that are already in the business. Which I think, I'm sure that these two individuals could start from scratch, wonderful companies. But I think it's better to find these broken companies, as you
fix 'em.
said, Joe.
Fix them, yeah.
Come in, you know what you have, you know what you need to do, it diminishes the risk, and it not only improves the upside, it expedites the upside as well.
And you will always have the regulators on your side doing that. That's very smart.
You always do, but
Yeah, I know what you mean. All right, I'm done with questions here. I don't want to bore you with the... So I'll leave it up to you guys. Any questions you have, please go ahead. You can go to this speaker or that speaker, wherever you are, on which side.
Question for the panel. Can you give me 3 ideal scenarios of broken businesses? What are the 3 most common that you encounter? Can you list off some, please?
Broken businesses, a school that has a very high dropout rate, attrition, heavy attrition, usually lower socioeconomic students who are dealing with problems in their lives. So attrition would be 1. 2, schools who are buying their leads but not screening them properly, so 30 to 40% of their lead base is inefficient, they don't get refunds on it, and they've just dramatically increased their marketing cost. And I would say the last is schools that are run by educators instead of businessmen, where they believe that the educator is the person who should be paid attention to instead of the client who's the student.
Well, let me add to that. And when you have the educator running the business, you have someone who feels that the fix in the correction has to come with something new rather than dealing with something they have and make it work. i.e., I've met many of them who think, oh, I'm going to add 3 new programs and maybe I'll attract a different market share to my business. And all they end up doing is thinning out their portfolio and unable to know how to not only attract or reach their market, but pull their market into the arms of the school and of the system.
I want to add one other thing to that, and that is my teacher taught me something, and he said to me, a good teacher is someone who goes down to the level of his student and brings that student up to his level. In the schools that we work with, there are students at all different levels. It's the job of every one of the teachers to be on board, to understand that it's their job to help these people to change their lives, to work with them, to bring them up to the level that's necessary to have them succeed. That's what a good teacher does.
And the 33 reasons you asked for, here's number 33. In simple terms, it's called training. Too often we have found systems have felt that they need to grow their business with the only focus on starts, new students. Mm-hmm. You can't grow a business with starts. You will grow a business with the entire business and the synergy of each and every one of the departments that services those starts.
I would piggyback on what Stan and John said. One of the symptoms that you would find is you typically spend $1,500 to $3,000 to acquire a student, but they don't spend any money on keeping the student. And so when the student drops out after the first term, there goes your profits. In terms of marketing and advertising, if they're still spending a disproportionate, if they're spending anything on TV, it should make an alarm go off.
Yeah.
And then what John said is most educators believe they need to roll out new programs, but they never stop and rationalize the programs that they're offering. Right. And when you simply go through and you see there's 2 students in the classroom, that's not profitable. And you need to develop programs that are in high demand. You need to be in touch with the market.
And let me say to the 2 students in the classroom, what a disservice we've done to 2 human beings. Mm-hmm. Because all it is building failure into their career or hopeful career. How much excitement can you get in a classroom? Now think about your own life with one other person in the classroom on Wednesday and Thursday nights at 7 o'clock.
Well, how excited can the professor be to be there teaching 2 students?
Yeah, exactly. So it's a matter of what Stan just said a moment ago. You need someone with business savvy who understands the importance of break even, who understands the importance of the financial aspect of the service, and if you do, you got a winner. We see it in underperforming schools that are tremendous opportunities for purchase and turnaround.
Thank
If I
you.
may add, this is a fundamental background, obviously, which is critical. My technical perspective from a hedge fund point of view is that I still have to buy it optimally. So this broken company that I'm looking for is really mispricing.
Mm-hmm.
Yep.
As George Soros would tell you, that if a
Yep.
company looks like and smells like it's a bankruptcy candidate and it's valued or priced as a bankruptcy candidate, but isn't for some reason, because perhaps these gentlemen can make a difference, then you have a huge play. So that is what you look for. You look for, everybody threw in the towel. It may be selling as a penny stock at some point, but you know that you can bring it back Again, hopefully with as little effort as possible. And in my businesses, it was usually amputating a piece of a company that was really problematic, and it could be in this case as well, if it's a sort of a heterogeneous company and has several exposures. But you always look for mispricing going in. And here you have a group, I think, that can find these mispricing at an entry point into a position, which is critical. That's the only time that you control what you pay for these things.
Thank you, Michael. Thank you.
Even the most successful of the companies, I'll tell you, are mispriced. Because they really haven't implemented a lot of the programs like the government's Career Pathways program, or probably handled their internet lead purchasing, or set up their websites properly. So every company is really undervalued. It's just a question of buying the one which is the most undervalued, that has the greatest possibility to grow.
Yeah.
Yeah, thanks for your
I'd like to
question.
leave,
Thank you.
excuse me, I'd like to leave some other people for questions. Go ahead, Kate.
Thank you for your presentation. I am just curious. I certainly understand private equity's strategy of going in and buying groups that don't understand how to move things forward, and you can come in and pop it and move it up and package it up together and sell and make good money. I understand all that. But from investing in education as an investor, I'm really trying to understand what are the hot things that are going on today, from a technology standpoint. What's happening? Because everything's shifting in every single sector, everywhere. And so if I buy a bunch of companies that are kind of older, that have been developing, and I'm coming in to fix them, but the whole entire industry is shifting, I don't know exactly where I'm going to get to go with that. So I'm curious, and I'm going to sit down to hear your answers. What are the hot technology shifts that are going on in education that I would want to invest in?
It's not just the technology shift, it's how we're using the technology. Let's take online education. Online education, in fact, I was part of the CNN test years ago when they wanted to determine, could we teach 100% online, or did they still have to spend a certain percentage of time at the campus? Obviously, we succeeded. But what became an online, 100% online, was abused, frankly. And they didn't vet students in a manner in which they should have in order to provide them with the kind of information necessary. So since that time, and now, what we find in the school systems we visit with, many of them have online capability with their accreditation, but either partial or total, but not using it, very underdeveloped. So we found that if you bring in 3 platforms to the education piece with that technology, you can go 100% online. You vet students who might want to do a hybrid, which is, let's call it 75% on ground and 25% online, which helps families scheduling and other responsibilities or commitments. And then there's a third platform, which is a flip of the hybrid, and it's a hyper online. And hyper online is 75% online, but requiring the student to come to the campus either every Friday during the month or one weekend a month to satisfy time and instruction and get a sense and a feel for what the university life is like, meet other students, meet their faculty, so that when they're online and want to speak to faculty on demand, there's a human connection that's taken place. That's one of the hottest things that's moving right now in the education sector.
Thank you, John. Go ahead, Nimish.
Wonderful panel. Thank you for your great insights. I just wanted to know what is the secret sauce of the 200%. Is it the strategy? Is it the team? Or what exactly goes on to bring that kind of return? Thank you.
I guess the secret sauce, Nimish, is market information.
It's none of his business.
I'll always tell somebody what the secret sauce is when I know they can't create it. So,
No Kool-Aid.
The secret sauce is having the people who have the market connections, right? With people who know the value that you bring to not only to the business to help the business to grow, but your attitude about the outcomes of students. People who work in the school business don't make a lot of money working in the school business, and you only really work there if you think, or if you only work there and stay there if you think that the student is important and you want the student to succeed. So these people that John has met over the years and mentored over the years, and that I've mentored over the years, and that Sam Jarvis has mentored over the years, and Peter Terabisi, and all of the people who work with us, people call us on the phone and say, hey, did you know that blah, blah, blah is going to be up for sale? Or I worked for so-and-so for 10 years, and I think he may be interested in selling his school, but he doesn't want to sell to anyone. He wants to maintain his legacy, and he's not really interested in the private equity kind of guys. He wants someone who really will care about his student and his staff and will bring them along. If you're interested, call me and we'll set up a meeting. John and I, as a matter of fact, have had 3 or 4 meetings like that with people who've owned 15 and 20 schools. The one we just bought, he asked us the price. We paid him, told him we would pay him the price. He never sent it out to a broker. He never discussed it with anybody else. Yeah. And he's rejected, 2 private equity companies coming in, some of the ones that you've mentioned, has rejected them because he felt that they were just buying it, to make money on it and wouldn't take care of his people.
Yep.
These people really, really care. Businessmen really care about what they've built, and they're not only looking for the money. A man who's making $6 to $8 million a year from the EBITDA that comes out of his school, and he's the sole owner, doesn't really care, whether someone's going to give him 35 or 40 million, because he's got that in the bank already from the years that he spent in the business.
Especially those kind of people in the education space, that they abhor Wall Street, they abhor private equity people, they abhor their arrogance, they don't want to deal with them.
Yeah. And they don't like dealing with people who don't know the business.
It's like family, exactly. I know
Our
what you mean.
family.
Exactly,
That's right.
exactly.
That's right.
Close knit in family.
This gentleman, very gracious gentleman, is concerned about preserving his legacy, but a part of his legacy are the people who stuck with him for 20 years. Or 15 years or whatever, and wants to make sure that whoever buys his business is going to honor them.
Exactly.
And give them every opportunity to show their talent.
Yes, Michael.
Ziad, I'm sorry.
Yes.
Go ahead, Michael.
Well, very specifically to your point, again, having catered to many hedge funds as a sell-side analyst, I can tell you that unless you had 100% appreciation idea within 12 months with manageable risk, they wouldn't talk to you.
Yep.
20% no interest.
Easy.
So how do you find those 100% plus ideas? Well, first of all, if it's a public company, you look for overreaction. So the first question was, well, what was the bad news for the company? And there's plenty of bad news in the educational vertical.
Yep.
For those of you who follow the industry, you know that, which is one of the reasons why the industry got clipped.
Yeah.
But you also need some kind of a catalyst within a specific period of time that will allow that overreaction to diminish, at least diminish. And in the context of recovery, if a stock is down from 25 to 5, it should have gotten clipped, but probably to 12, not 5. So if I can buy it around 5, if I know, that as an investment banker, I can sell this company in a private market to a strategic buyer or a financial buyer for 12 or 15, that also gives me a cushion on the downside. And then within that play, that arbitrage, if you will, the difference between the private market value, some call it intrinsic value, but that gets confusing. To me, it's real private market value that I know that I can sell it to another player in the industry or a financial player who understands financial and capture the pricing inefficiency that the market gives me because of an overreaction. So it's that overreaction that gives you that secret sauce, if you wish, plus timing, which includes your catalyst, that I see here time and time again, particularly in the context of a relatively concentrated portfolio that will not be diluted by the market's vagaries and too much exposure to the group, which even that could be dilutive.
In my experience in turnaround management, if you had all the ingredients Michael talks about, and you have 5 different groups, The separation factor is execution and management. You either get it done or you don't get it done. And if you spend all your time talking about strategy and not executing, you're not creating value.
Look, it's more than that. There are two things I look for, when doing these kind of deals. Track record and skin in the game. That's it. People with no track record, it's all bullshit. Show me what exits you've done, what track record you've done, and how much do you have skin in the game. The more you have skin in the game, the more it shows me that you're committed with a track record.
Yep.
These deals are always bound to happen and very interesting. All the rest is talk.
Yeah.
Like they say, money talks and bullshit walks. Thank you guys for coming, all of you. Our next event is going to be on October 30th. Mark your calendar. It's going to be about smart cities. All these smart cities being built around the world with a bunch of top-notch operators from the US, Europe, and the Middle East. We're going to be doing that. And then our last event for the year is going to be on November 19. It's going to be about branding. How do you brand your company, you brand yourself, etc. With also a group of experts going to be talking about that. So thank you very much for your time. Have a fantastic evening.